What's up? What's up? What's up? My mind, your money business folks is me yet again with another video. And as we are at the last 5 minutes of the stock market being open for today, things aren't doing so well. And could it be because of the Federal Reserve? Will the Federal Reserve stop cutting interest rates? You know, the Federal Reserve meets again early next month, right after the presidential election. And now they're talking about not cutting, possibly, maybe not cutting the interest rates in November, which isn't a good thing because when interest rates are low, people borrow money, people spend more money, people invest more money. Banks can borrow more money to grow its business. You know, stocks, are cheaper. People start pulling out their money that they've been saving in these high yield savings accounts and start investing more, so on and so forth. Because it says here, no, there are doubts that the Federal Reserve will continue to cut rates aggressively or even hold steady in November. And that's not good. So will, not cutting rates possibly crash the market? Things were at an all-time high and now they're starting to slow down. Things could be politicking, who knows? Things just aren't going too well in the stock market at this point. So let's get into this. Let's see what's going on. It says Dow, NASDAQ, S&P 500 recover from lows as Treasury yields hit highest level since July. It says U.S. stocks recovered from earlier sessions lows in late trading on Tuesday as investors digested a recent bond market sell-off and the next wave of earnings reports. There are a lot of earnings reports that are coming out this month from companies. And NVIDIA is posting its earnings in November as well. Well, November, not this month. Okay. The S&P 500 hugged the flat line after dropping about 0.2% earlier in the trading day. Meanwhile, the Dow Jones Industrial Average and the tech-heavy NASDAQ Composite each ticked up around 0.1% and 0.2%, respectively. The strength in the economy, cautious Fed speak, and concerns about the fiscal impact of an election win by Republican nominee Donald Trump are factors in play. And Donald Trump does not like Jerome Powell, the Fed chair, the Federal Reserve chairman. He wants to replace him or either have more of a tighter hold on what they do. So the presidential election is next month. The Feds meet. When do the Feds meet? Is it the 5th through the 7th? Or is it the 7th through the 9th? Let's see. I forgot the date. Federal Reserve next meeting. November 6th through the 7th. Presidential election. Is November 5th. That may have something to do with people because say Donald Trump wins the election November 5th. The Feds meet November 6th and 7th. Do you want to give a rate cut under a Republican president who do not like you? That makes a little sense, right? Because say if you do rate cuts right after he wins the presidency, whoever's president can account for that and say it's a win under their presidency that rates are going down, people are buying more homes, businesses are borrowing more money to grow, people are investing more money in the stock market because the valuations are just going up. So do they want to give him that credit? I don't know. Either way, that's just me thinking. my opinion, right? Because disclaimer, I almost forgot about the disclaimer. I am not a financial advisor. All content provided on this channel and videos are for entertainment purposes only and reflects my personal opinion. So please do your own research and talk to a financial advisor before making any investment decisions. So moving right along, it says amid uncertainty, the 10-year Treasury yield steadied about 4.2% after Monday's sharp gains helped push it above that level for the first time since July. The bond selling has weighed on rate-sensitive stocks, such as real estate, with rising yields typically a catalyst for a stock drawdown. Okay, on the earnings front, General Motors raised its guidance for the third time this year as upbeat EV sales helped deliver a quarterly profit and revenue beat. That's good. General Motors shares were up more than 10%. That's really good. Elsewhere, earnings, GE Aerospace fell over 8% and Verizon shares fell around 5% on mixed third quarter reports. At the same time, anticipation is building for earnings from Tesla on Wednesday as Wall Street debates whether the Magnificent Seven tech mega caps will lead stocks next leg higher. Despite higher yields, gold prices rose on track to top Monday's record high. The gains came as investors sought safety with the U.S. presidential election looming and Middle East tensions still on the rise. Interesting. So the stock market just closed a couple of minutes ago. So let's see what the stocks have done. Okay, it looks like what happened with Nvidia today. Nvidia looks like it went down 12 cents today. Not a bad loss, if you ask me. You know, at least it stayed above 140, which I believe is a good thing. What else? SPLG. My S&P 500 ETF went down 4 cents today. FTEC, my information technology ETF, went down 19 cents today. So not a major drop. Broadcom went down 61 cents today. Tesla, 88 cents. Microsoft had a nice gain of $8.73. And Microsoft is currently trading for $427.51. And I believe Microsoft is going to boom in the future because of what the company is doing. They're investing in AI heavily, the cloud services. Yeah, but I'm not buying it right now. But I do have it in my S&P 500 ETF. So I am investing into Microsoft, just not as a single stock. So yeah, so that's it for today. You know, will the Feds hinder the stock market by not cutting rates? Will it crash the market? Who knows? But either way, like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, make sure you're investing. Again, this is for entertainment purposes only. I'm only sharing my opinions. If you need financial advice, please seek a financial advisor before making any investment decisions. All right, you guys take care. Peace.